Good morning, everyone. Welcome to the Modern Market, where every day we discuss everything to do with the modern market. That is the crypto market, the NFT market, and how to hopefully make some money, make a market out of the market. That is what we're intending to do today and every day. Loaded up for the discussion today, we have Ethena and Securitize announcing a new chain, Converge, a settlement layer to bring DeFi and TradFi together. Big news. We'll dive into that, get you everything you need to know there. We've got Robinhood launching prediction markets powered by Kalshi, and you've got Trump-inspired World Liberty Financial closing $550 million across token sales. We'll get you all the information there, as well as general thoughts on the markets and how things are moving. I've got Legendary and Rahim with me in the co-host seats today. We are ready to get into it, but just a reminder, friends, before we do, nothing that we say here is financial advice. This market is very, very risky, so please proceed with caution and exercise your own judgment. With that out of the way, Rahim, it's Tuesday. It's the 18th of March. How are you doing? How are you feeling?
To be here. It's been good. It's been nice. I was listening to what you were saying yesterday and certain tweets on the timeline. I feel like as crypto markets get boring and quieter, everyone's fitness level starts going higher and higher. Been experiencing that myself. I've been like the healthiest I've been in like a year or so. So it's been kind of nice to kind of take that balance, focus a bit on reading, kind of play around, like look into some of the protocol stuff that has been coming out lately. But it's been good. It's been nice, calm. I like it.
Interesting. Yeah, you gotta this fitness thing. This is just a perfect indicator of cycles. I think we've been speaking about that a bunch. The fitter you are, the less there is to do in the market. Although eventually you've got to find a way to keep it going, irrespective of the market movements, I think. What are you reading, Rahim? Anything? I've been thinking I need to pick up a book again. Maybe that'll be another indicator. I don't
How
really
about
do
you
a lot
read
of
that
that at
book
the
I
moment.
gave you? How about you read the book I gave you?
Yeah, it's on my
Uh, I,
it's on my what do you call it? The thing next to your bed, the
I
table.
I've been reading it. It's a super nice book, and I think it's like it's called like Super Fans. And I think sorry, I realize it's laterally inverted. But I think like the concept is like super nice, and especially for our Web3 ecosystem, because I feel like too many people focus on scale of a business, whereas the concept of super fans is finding that group of people like who really connect with you. I think NFTs is a great example. Like you have 10,000 NFTs, they're not built for scale, but if you're able to build super fans, is why CryptoPunks is worth 80K, or like a Pudgy Penguin is worth whatever like 25-30K it is today. It's a very interesting book.
I love it. That's such a good point. It's actually super specific to this industry, and a brilliant business model. So I'm gonna have to take you up on that, given that it's on my bedside table waiting. Funky, your hand is raised here. Have a thought on the superfan principle, the concept? What are you thinking?
I mean, clearly, I'm the first modern market super fan, right? Like we can all agree that that's the case. But more importantly, I am just coming up here to be a contrarian about this whole fitness stuff because I've been getting in peak shape throughout the bull and the bear. I don't want to hear it. I just ran for the Dawson NYC thing. They had a run outside. It was 35 degrees, 23 with the wind chill. So for those of you that centigrade, that's like well below zero in a
Oh.
t-shirt and shorts. And people were like, "How are you doing this?" I think it's mental. It's just like I'm Wim Hof, right? Like it's just so I don't want to hear it. Just you need to be in your body is your vehicle for consciousness. Treat it well, right? So you can perform in all aspects of life, including mastering crypto markets.
I agree. I agree. I agree. I'm not disagreeing. We're also dealing with some other mental and sporting desires here in the YouTube comments. Looks like we're planning a golf trip at some point as well. I think that would be helpful. All these things would be helpful. We're going to have to take care of all of them as we move forward. And as you say, do it in a more sustainable way. Legendary, what about you? What are you thinking? Are you reading something at the moment? Are you writing something? I know you dabble in it with a bit of writing. When are you going to learn golf? You said you're going to do that too.
Jim, so many questions. I'm always reading. It's part of my daily routine. I love reading. It's my favorite way to consume media. I told you I can't listen to podcasts, can't listen to stuff. I need to read, and I love it. For me, the bear market indicator is writing. You are right on that. And I've actually been pretty Coming along pretty well on picking up the writing side of things as well, and like kind of halfway through, bit more than halfway through the novel that I've been writing for quite some time. Other question in terms of the golfing, it's actually also a recurring theme in the YouTube comments. It's not only today that we have this wish for a modern market golf trip. That comes up every now and then. So I feel like at one point in the future we need to do that. And yes, I did start the golf lessons. I'm a bit of a situation there, I'd say, because I wanted to start with a like course with 4 to 6 people, which was supposed to be end of March. I missed the deadline for that. Then I basically called the instructor and asked him, can I get private lessons to get started? He was like, yeah, sure, which I started to do. But then I also realized I have no one to play golf with, apart from a friend of mine, where the skill gap is just too big for me to not be embarrassing. So I kind of want to join a group again to have some people to play with. But I did start, and I'm starting to train for the modern market golf trip to get this thing going. And one more thing to point out is also from the YouTube comments, the mixed signals that we are sending. You're green, I'm bright red. The market does not know. The comments in the YouTube don't really know what to do with that. Rahim is also more on my reddish side. So is it a consensus bearish day, or what are we doing with the fashion color coding?
I told you I'm having a nibble here. I had a nibble for a couple of assets that I think are undervalued. Had a nibble of Bitcoin not long ago, around 81. Had a nibble at Hype at 13-ish. But just small, because I think if we're going to stay here for a while, I don't see a V-shaped recovery. I don't think we're going to rip up suddenly, although you never know. Holding the core long positions, and then as I said this yesterday, buying Hype at 13 is better than buying it at 30 if you think it's good. So yes, could it go to 8 or 9 or 7? Maybe. But if you think it's going to be good, it's probably better to buy it here than it was to buy it at 33 or whatever it went to. So that's my kind of thinking. Bitcoin also at 82 or 3, better than buying it at 109. So if you think it's going to be good, have a nibble. That's what I'm thinking. So that's why I'm wearing green. Okay, let's get into the main stuff so we can get a better sense of the general market, starting with the price action on Bitcoin as usual. And the majors, we've got Bitcoin at 82.8, which is pretty much flat. ETH is also flat at just under 1.9. XRP is down a couple of percent to 227. BNB is at 635. Solana is down 3% to 124. I wonder if it just dumped 3% because of the ad yesterday, which really drove people crazy on the timeline. The advertisement, which they put out yesterday, the video. Getting into the meme coin side of things, we have Dogecoin down 3% to 16. SHIB is down a few percent. Pepe's down 1%. Chump's down 3%. Bonk's down 3%. WIF is also down about that much. Pengu's down almost 9%. Still up 10% on the week, though. SPX, Murad's coin's down 5%. Also up 25% on the week, though. A lot of these tokens now, what you can see is they might be red today, but they've had a bit of a bounce more generally on the meme coin side of things, like up on the 7 days, anything between 5 and 15 or 20% or something like that. Fartcoin, for example, down 10% today, up 20% on the week. So still exceptionally volatile on the meme coin side of things. Getting into the main headlines themselves, as we mentioned, Ethena and Securitize have announced a new chain called Converge, a settlement layer to bring DeFi and TradFi together. That's very significant. There's a bunch of really big players involved in that. I'll be breaking down those details a little bit later in the show. Got Robinhood launching prediction markets powered by Kalshi. We obviously are very much aware of the emergence of prediction markets in the last year, with Polymarket being the main one. Legendary is going to take us through that deal or what is interesting about it. And then finally, Trump-inspired World Liberty Financial closes $550 million across token sales. Rahim will be breaking down what we need to know out of that and any prevailing sentiment that's come out as a consequence. Some notable sales. Autoglyph, we've had a high sale yesterday. We also had a 103 ETH sale yesterday too. And anything else to note on the NFT side of things, Legendary?
Honestly, there's just one thing to really point out, and it's the continued success story of the Good Vibes Club, which we spoke about yesterday. Floor price just keeps going up. Actually went as high as 0.6 for ETH at some point yesterday before it corrected down to 0.5 ETH. but there's still a lot of volume in this collection. Still see 944 24-hour sales, 630 ETH in volume. Those are numbers that we haven't seen and heard in quite a while.
Yeah, pretty cool. Yeah, a lot of excitement about that collection. Have not seen a collection come out like that in recent times. Getting to the Web3 Roundup to get you up to speed with everything else in the market. We have Canary filing for a SUI ETF, all kinds of filings happening for a variety of ETFs now. Floodgates are really open there. Standard Chartered Bank cuts ETH year-end price target by 60% from $10,000 to $4,000. Pretty classic. Some of the traditional analysts deciding at the most bearish time to cut their predictions. Strategy, Michael Saylor's Strategy bought another 130 Bitcoin for 10.7 million. Some people noted that it's not the way around to do it. You're not supposed to buy loads at the top and then buy less when it goes down. But that seems to be what's happening. Obviously, this is a less sizable buy than what he was doing when it was around 100K. Backpack announced seasons to start this Friday. Keeping a close eye on that. I think the Backpack ecosystem, which has obviously got the Mad Lads NFT ecosystem attached to it, definitely worth keeping an eye on what they're doing, building a pretty big exchange. And I think this could be an airdrop opportunity, potentially, something to keep an eye out. No further detail provided just now, something to keep an eye out. And very interestingly, crypto.com will reintroduce 70 billion burn tokens to its supply after it pushed through a vote with many votes from its own validators. Some time ago, they had burned a bunch of tokens, and now they want to reintroduce them to the supply. They put it up for a vote. It looked like it was very, very close, but then a bunch of the votes, which they seemingly are in control of, came down on the side to vote for this increase in supply, which I think people have criticized as, making kind of a joke of decentralization or any argument that we are actually in a decentralized space more times than not, because this is realistically not a case where the DAO vote was kind of respected in that way because they control so much of it. That was the reading I got from it. But that is the Web3 Roundup to get up to with everything else in the space. Before we get into the main stuff today, Rahim, anything catching your attention from here? Any other more general thoughts on the market at the moment? What's going on?
Yeah, I had two. So one was on the NFT side. We saw like a plethora of 6529 memes sell yesterday. So they've been having like a good amount of volume. So it's kind of like nice to see like some of these like legacy NFT art collections getting that recognition. Of course, we don't know what that means in the long term, but it's kind of nice to see that. The other thing I wanted to mention, and I'll leave Legendary to talk about it in detail, but like it's so interesting that like with like the prediction markets, essentially like I feel like the one business model that everyone can agree on this cycle has been volume. Every product, every ecosystem that has basically like worked on volume, whether it's hyperliquid, whether it's prediction markets, is why like everyone's doing it. And you can see this more and more. And it goes into like, when you speak about the Ethena conversation as well, we were having on the timeline. It's just like so fascinating to see that, like, we've been trying to build products and this and that, but at the end of the day, volume. And it's like it's the sex game, what these centralized exchanges have been playing for so long. So I just find that fascinating that even after so many years, volume is the king.
Yeah, that's a good point. I think people are really going after volume. People are really focusing on revenue too. Really focusing on revenue and people actually making money rather than just kind of selling potential and hoping that protocols will end up making money and selling a dream. Interesting points there. Ledge, what about you? What's catching your attention on your side? Anything from the roundup or elsewhere?
Yeah, I kind of want to double down on your last sentence on people actually looking at revenue. This is the sense that I've also got from Consensus in Hong Kong from a couple of the founders who went there and whom I chatted to, who basically spoke to a good amount of investors and more institutional capital, especially when it comes to Web3 gaming, that they went away, both VCs who did not invest in gaming yet, but also VCs who burned a lot of money in gaming, to look at this token component and put too much value on that, but rather try to value it more like a traditional business and try to understand at first, is there a game? Is there a revenue stream attached to the game? Is this a profitable gaming studio? Which is almost unheard of in Web3 to approach things like that. But I agree with this view, actually. It's also kind of tying into what what Rahim just said by looking at volume and then again connecting that to the crypto.com news, because we are faking so many metrics from user numbers. I mean, we also fake volume, but so many things are basically faked. And if you look at the crypto.com story, just by unburning or reintroducing those tokens, or however you want to call that, Andre Cronje make the perfect point. Tomorrow, Kronos goes from a $2.5 billion FTV to $8.5 billion FTV with a single vote, and all it needed was a single voter. So we've seen that with parts of the AI season, that market caps, FTVs are a meme, and I think this is another very strong point at that. So it kind of begs the question, what is real, what isn't, and what to actually look at, both as an investor or someone who's interested in something in terms of like real tangible metrics. And the revenue aspect might even become more relevant again. And I remember we had this discussion around some of the DEXs and other DeFi protocols to actually see, oh, the token is undervalued against the revenue, which again, I don't think is necessarily a good metric because you just don't have a revenue share if you own the token. But abstracting that away and looking at the profitability and revenue of a business, of a protocol, and just try to evaluate it based by that, seems to finally come to crypto, which also feels so absurd to say because this is how investors have been evaluating companies in the real world for decades. But I don't know. I sense that we, at least for now, shift a bit away from hyping things up and looking at more tangible and more real numbers, which is a good feeling. But I'm also pretty sure it's going to go away again once we're in the next phase of hyping whatever will be the next trend.
Yeah, it's a really, really good point because this is going to feed very much into the discussion on Converge, which is the chain that Ethena and Securitize have launched. I'll set that up all properly in a moment to take you through all those details and what are the key points to note. It kind of goes to the heart of, like, I think it's becoming quite a serious moment, I think, in general for the industry, where it's like, to what extent do we believe that decentralization and censorship resistance matters? And I saw a really good point by DC Investor, which I guess I hadn't thought about before, because on the one side, we have a lot of people leaning towards revenue, like revenue is what matters. But I think his opinion was, as soon as we started talking about revenue, we started losing sight of like what truly makes ETH valuable as like a public good. And look, maybe the reality is a lot of public goods don't get valued appropriately because you have the free rider problem and people are not willing to invest into that because everyone else is using it too. But like the censorship resistant aspect, I guess, will only be valued when something censorious takes place. And maybe that's hard to value in advance, right? So at the moment, in the same way that Andre said decentralization with respect to Kronos, we're saying decentralization does not matter until it does. Maybe it's a similar thing with censorship resistance, where it's like, you're not valuing it at the moment, right? ETH is probably the best positioned smart contract platform settlement layer for that. And we are not valuing it. Like, it keeps going down relative to other blockchains that keep launching, are far more centralized. And ETH is losing out to that because for whatever reason, we are not valuing it. And maybe we won't value it until we really, really need to. I don't know. That's something, it's kind of a existential philosophical point, which maybe we'll touch on a little bit more in a moment. Okay. Any further comments on that? That's obviously going in a particular direction, but any further thoughts, boys?
I think that generally holds true for a lot of things, what you just said about not valuing things until you get to the moment where you actually see the value in them. I feel like Europe is in this position when it comes to its own military and defense spending. And now that the US is kind of saying, look, we are pretty fed up with taking responsibility for your military needs. Germany and other countries are realizing, oh shit, we actually need to spend in military for military infrastructure, which they ignored for such a long time. So I think that's often the case with many aspects of life, that you only see the value once you come into a situation that latently shows you exactly why you need some things.
Especially when it's kind of partly socialized benefit. Like the military is beneficial to the whole country. Energy, for example, is beneficial to the whole country. So which individuals are going to make sure that you value that sufficiently? Well, a bunch of individuals might say, well, why should I be the people? Why should I be the person to fund this and make sure it has value if no one else is going to? Why should it all be on my shoulders? And as you say, it becomes far more important when you realize that that independence is pretty important in certain ways. Interesting stuff. We're going to probably get back into that angle in just a little bit because it's super important to the Ethena and Securitize conversation. But we'll get there in just a moment. Before we do, we've got a Polkadot exploration to bring to you as usual once a week. We're working with Polkadot to explore something that's going on their chain in an interesting way. Legendary, why don't you take it away?
Let's do it. Let's dive into Evrloot, a browser-based dark fantasy MMO, which is built on Moonbeam, a leading pirate chain in the Polkadot ecosystem. So what's the game about? What makes it special? It's a casual on-chain browser game set in the immersive fantasy world of Estra. There is an entire medieval world waiting to be explored where you can dive into evolving lore, make yourself known in fishing tournaments, and we do like the fishing tournaments, or outsmart other traders in the auction house. The cool thing about that is how much of the game actually lives on chain. I'm going to get into that a bit later, without creating any friction for players. So what is so special about the tech? How does it work? It uses the RMRK2 NFT standard, which allows characters and items to exist as highly interactive NFTs. So these NFTs are not your typical digital collectibles. They can own and equip other NFTs. Imagine your character owns a legendary sword NFT, which itself can be upgraded, traded, or sold separately. And these NFTs can then also evolve over time. What is pretty cool as well is that player progress, including levels, achievements, in-game transactions, is recorded on-chain as well. Even save games are treated as NFTs. And the game is building some real momentum now too. Just to put it in perspective, the game was the number 2 top app on Moonbeam by transactions in January. It did almost 200K transactions, which is a bit more than both StellarSwap and BeamSwap, and less than the leader tokenizer, the tokenizing platform, with 800K transactions. And one of the reasons this all happens so smoothly on Polkadot is because Evrloot has developed EasyPay, which is a novel system where players can top up money to handle transaction fees without having to manually approve or sign each action in game. And apart from that, most of the transactions are being handled in the background. They are happening without you having to spend gas for that. So if you want to explore the medieval world of Estra and play Evrloot, you can do that in your browser. Just head to evrloot.com, that is EVRLOOT.com, and start playing for free.
I like it. Interesting stuff. There's a bunch of games taking place on or getting built out on Polkadot. Remember, we spoke also about the other day about Mythical Games, who are building the Pudgy Penguins, one of the Pudgy Penguin games, getting built out on Polkadot as well. So a lot of gaming stuff taking place there. Interesting to hear about that.
Just before we move on to the next news, Funky has his hand up as well, and want to hear from him on that as well.
Thanks, Legendary. Just real quick. So yes, I know the two, Deckard and Lou, they founders. Lou's actually a king with me in the kingdom. What they have turned this game into is absolutely just mind blowing, because we think of, oh, I got to click the wallet, got to do another turn. Like, all that is completely abstracted away. Like, I saw it at ETH Denver. I've never played Evrloot, full disclosure, because when it became a thing and people like in the kingdom were going nuts and playing all the time, like, I was a D&D nerd when I was a kid, and I'm like, I am not touching that. I will just spend so much time playing that thing if I even get sucked down to that rabbit hole. So I didn't want to get anywhere near it. But I watched the gameplay, and it is crazy how they've abstracted everything away. Like, you don't ever see a wallet. You don't do any of those things. It just looks like you're playing a game. Like, you go out on a quest, you do these things. And it was really, really impressive to see like what they've done. Yeah, and there's a tons of games, you know, in addition to the Pudgy Penguin thing for Mythical, there's also the FIFA Rival game is coming out this summer too. So a lot of big things happening.
Yeah, I actually tried it yesterday when I was basically preparing, writing the segment. And it's true, like, you can get set up with Google, with your wallet, with a Privy wallet, whatever, and just play along, and you don't really see the transactions happening. I feel like kind of also reminded me of Pirate Nation, which did it in a cool way when you were playing that game. And basically, you also weren't seeing the transactions. It was working pretty smoothly, but they had a tab to show you the transactions that were happening in the background. So if you wanted to nerd about it and find out what is happening off chain and what is happening on chain, they allowed you that view as well. But from a player's perspective, pretty smooth.
That's pretty cool. Very cool. Appreciate the additional info, Funky. Let's keep it moving then into the first headline. This is, I think there's actually 3 big headlines today. Big news: Ethena and Securitize announced their new chain, Converge. It's a settlement layer to bring DeFi and TradFi together. This is, of course, the big vision here, I think, is that Ethena and Securitize want to bridge traditional finance and decentralized finance together. And this is pretty interesting to me for 2 reasons. First, Converge appears to be leaning more towards the institutional investors by offering permissionless DeFi applications alongside permissioned institutional grade offerings, such as tokenized real world assets and stablecoin settlement. But the reason why you can kind of come to that conclusion is Securitize is backed by a range of prominent investors from both traditional finance and the blockchain industry, with its most notable backer being BlackRock, the world's largest asset manager, which led a $47 million funding round in May 2024 and partnered with Securitize to launch the BlackRock USD Institutional Digital Liquidity Fund. The second reason I think this is interesting is it's Ethena's governance token, ENA, which will be used for staking by institutional validators. So it's not being secured by ETH or any other token. It's being secured by ENA. And there will be native support for Ethena's stablecoins. So that's USDE and USDTB as gas tokens. So gas and staking is no longer being done with ETH. You're using ENA to secure the network, and you're using their stablecoins for gas. That is pretty significant. The project has already got huge support from major DeFi protocols like Aave, Pendle, Morpho, Maple Finance, and Ethereal DEX, which I've actually been speaking about as a potential opportunity to park some capital for quite some time, because it's a tokenless project at the moment. And it has plans to integrate the $6 billion of Ethena's ecosystem, right? That's how much of the stablecoin market share Ethena's been able to capture so far. They want to create a whole ecosystem around that capital. So the blockchain is set to launch in Q2 2025, which is not far away, I guess, and is positioning it as a potential leader in merging that TradFi ecosystem and the DeFi ecosystem. One important point to note, I think, here is the pushback it received. We touched on it maybe earlier on the show when we started having this existential question about decentralization. That was kind of brought up by David Hoffman from Bankless, where he had this to say on it. He said, let me just find the tweet. I cannot find it at the moment. Legendary, do you want to just read some of that up for me, please?
Got it up on screen. He says, let me get this straight. We're taking assets from an open source, permissionless ecosystem, putting them on a new L1 with a quote unquote permissioned validator set composed of traditional finance entities and centralized exchanges. We are staking synthetic dollar derivatives for economic security of the permissioned L1. Excuse me, but what the fuck? We learned the private blockchain lesson in 2018 to 2019. DYDX migrated away from ETH in 2022 and then died. What the fuck are we doing? Quite some strong words from David Hoffman.
Very strong words. He's not the only person. He's not the only person who maybe is leaning into the more core fundamental values of what crypto is supposed to be, where you're supposed to have unpermissioned access, permissionless access to all of these game-changing financial products. This is the other side. This is the side that I can't remember his name. The founder of Ethena, begins with G, on Twitter. He shared this. I think you've got that tweet there as well, Legendary. He said this. So this is what they're going for: the holy trinity of crypto protocols that can be worth $50 to $100 billion. So this is where they're positioning this. This is the opportunity they're going after. Number one, stable coins, which they're arguing they've already captured in some ways, not as big as USDT with 70 billion, but 6 billion is pretty decent. I think they're the third largest stablecoin now. Number two, blockchains, and number three, exchanges. So as they say, Athena's first core product sits in the first category, stablecoins, but creates a unique nexus across all three via USDE, which is obviously their synthetic dollar. Today, we've released Converge, our vision, how we bind the full stack together, combining all of the above categories into our own chain in partnership with Securitize, who are backed by BlackRock. And I guess they're trying to bring TradFi into this ecosystem. It's obviously secured by their governance token, Ethena. And they say, he says, we are not satisfied with just one product. We want to win it all. So what does that mean? It means, this is how I read it, they've got the stable coins already. They want to own the chain as well. And then they're going to have to do the exchange. The exchange is ethereal, which is what we've spoken about before, what I wrote about like a month ago, saying this is the Ethena equivalent of Hyperliquid. And it's not just them who, like, I think a lot of teams have looked at Hyperliquid and say, we need to do that. Like, how good is that product? It's got perfect product market fit. That's one of the best things that crypto is supposed to be for. There are multiple people building out Hyperliquid competitors. You've got Ethereal on Ethena, but if you can see how this plays out, right? Every network is going to need their version of Hyperliquid, and they're going to need it ASAP, because that's just so much money that's being made by them, and everyone's going to want to have the same product as an offering. So obviously Ethena are doing that. I shared, actually, I don't know if I shared this yet. Maybe I shared it privately, but I'll put a tweet out about it soon. There's a team called Definitive, run by some ex-Coinbase people. I had a chat with them a while ago, and they were just sharing their ideas for their product. They've got an airdrop coming pretty soon. If you did more than 100K of volume on Hyperliquid, you are, in the last couple of months or so, you are eligible for their airdrop, which will be coming, I think, in the next few weeks. Again, it's just a cool platform to trade. They're obviously trying to vampire that market, and there will be more. There will be more people who've seen how much money was made there, and people who want to do the same. So I've kind of gone in a separate direction there, talking more broadly about the opportunity, or people wanting to build the Binance on chain, basically. But in general, this is big news, this Securitize and Ethena partnership, because as the founder goes on to say, in our view, the inflow of institutional capital into this space is the defining characteristic of this entire cycle. So that is the core thing. We've even noted multiple times in the show that the news is getting increasingly institutional as well. Like when we're talking about what is going on in the space, it's increasingly being driven by institutional or corporate news. This is another example of how the news and the capital are just becoming more corporate. So I'll stop there for a second. Would be interested to hear your thoughts going in either direction. Maybe I'll come to you first, Rahim, for any thoughts. Then Legendary will come to you.
Yeah, I think they're essentially like doubling down on like the like we were talking about previously, the business model of this cycle. What product made the most amount of money this cycle? Like the two products that come to my mind is like Pump Fund and Hyperliquid and stuff. They've been like very volume generating ecosystems. We've obviously talked about many times on the show how stable coins have been like one of the best business models out there. If you look at it like from a chain point of view, if you look at like the last like year, what the way I feel like the market has shifted, that everyone launches their chain, you essentially raise money on that infrastructure, you use that liquidity to bootstrap a bunch of companies. Instead of asking them to raise money themselves, you end up taking some ownership in those companies, and now you're hedged in a better way that if even one of those products does well, you will eventually like succeed as a business and stuff. So I feel like this is something like, we've been seeing this for a while. I remember Garga tweeted about this last summer, that like he's spoken to a bunch of people behind the scenes, and that like, I believe in his tweet he was talking about there are 50 to 100 L2s coming out, or like, ecosystems coming out this year. And I think like from a business point of view, at the core of it, if you look at it from like a VC and investor point of view, the amount of money that has been burnt with products is just been like ridiculous. So at the end of the day, I'm just like, if you think about it from an investor point of view, at some point you're like, I need to answer to an LP of why this investment is worth it, even if it's building like a centralized ecosystem. If it's a way more profitable business, why wouldn't we as a VC be more interested in investing in this rather than something else? So I feel like there's a difference in like just comparing what the bank from Bankless is like the consumer behavior and the builder behavior. I think those are two very different topics, and understanding the nuance of it is fundamentally very important.
I like it. A lot of fair points there. Legendary, which direction do you want to take it? Like, do you have any issue with this increased centralization? Do you think that's important? Do you think it's an inevitability at this point? What's your stance?
I have quite a few thoughts on this. I have an issue with David Hoffman's take because I couldn't disagree more with that. I think there's so many differences and it lacks so much nuance. So first of all, 2018, 2019, you just can't compare that to this environment where we have more than 200 billions in stable coins, where we have institutional grade stable coins flowing in. And it is not a private blockchain. Yes, it's a permission set of validators. That is a big difference. But first of all, Securitize is already issuing permissioned assets. And then if you think from an institution's point of view, there's two things why you want to have the permissioned validator set. You don't want to interact with an OFAC sanctioned counterparty, for example. So we've seen this even with things like Mega ETH. Mega ETH did take their NFT mint seriously, and they were checking for that when they looked at your wallet activity for the wallet that wanted to mint the rabbits, the fluffles. And then B, another good point is, if you remember this incident that happened a couple days ago with the one person was using, I think, an old outdated version of Uniswap to swap 200K USDC to Tether, or was it the other way around, and basically got sandwiched MEV to death and walked away with 5K instead of 200K. Yeah. And by the way, even the sandwich bot was paying like more than 150K to bribe to get that block, so it's not like they made the most money. However, you don't want to have this as an institution either. And then again, this chain offers you both. Like, you can go permissionless and do your thing if you're like DeFi native, and then you have the world for the institutions, which have a different set of requirements. And I actually feel that there's beauty in that, because, you know, maybe I don't care about KYCing and knowing is my counterparty OFAC sanctioned or not, because I just want to execute my swap or put my ETH to work and like walk away. And you have parties who have different legal requirements, and building a way or building a product that is still on chain and that works to fulfill those legal, those compliance requirements, and allow those more institutional grade participants to use those protocols as well, is actually pretty fucking cool that we can do this. And again, big increase in the stablecoin market cap. We see the institutional grade stablecoins coming along as well, and you want to see them being put to use. You want those institutions, if you believe that this is the way how we grow this cycle, you want them to be able to use your Aave, your Morpho, and other protocols. So for all those reasons, I think, and I've been skeptical about, Ethena and how the stablecoin works, et cetera. But this direction that they're taking, very much like it, and big fan of it.
Yeah, we've kind of diverged on. I don't think we diverged on it. We both accept that there's risk in this type of a stablecoin, because ultimately it's not a stablecoin, it's a synthetic dollar. I've just been maybe more prepared to explore it, whereas you've been like, no, my stablecoins are meant to be stable. I don't want that risk. So it's more just a risk management thing. Just wanted to share, Funky, I see you with your hand raised. We'll come to you in just 1 second, but just as a quick indicator of what the market did. So I think this is pretty big news. The token Ethena is inevitably Ledger is doing the wrong screen again. Is down 4% on the news to 35 cents. If you kind of zoom out on this chart, so at 35 cents, this is a $5.3 billion FDV. They've had actually multiple airdrops at this point, so this is not as illiquid as some of the other ones. The market cap is 1.9, so it's by no means fully diluted, but it's on its way. There's another airdrop coming soon, because they keep running these different seasons and getting Ethena out to the market. The other thing to note, though, which is very, very important, is the investors, I believe, are starting to unlock now. So this is the thing that's held me back from buying the token, because this is something I would 100% want exposure to, because I think A, they've executed brilliantly on their stablecoin strategy. B, I'm I'm kind of betting or thinking that they're going to execute really well on the next set because of how competently they've done the first set. And I think they've been doing that quite impressive. However, the big hangover is the unlocks. As you know, in this space, when people have invested at, I'm not sure what price, but it's obviously much lower than a $6 billion FDV. You might have a lot of people who are willing to sell routinely as their tokens continue to unlock over time. So that's the thing I would double check. That's the thing I want to double check. But even with that in mind, I feel like the downside's getting, I don't want to say it's completely capped. You can see it went down to as low as 21 cents or so in August or September of last year. That would have been after one of the airdrops where everyone would have just sold aggressively. Then on the top side, it goes up to more than $1. And then I think the unlock started. So definitely double check that if you're thinking about getting involved. Always worth double checking. Funky, your hand is raised. What are your thoughts, my man, on whether it's Ethena itself or this version of the chain Converge, which they're seeking to build?
A couple of different things. First and foremost, yeah, I'm like you, B-Check. I've been interested in this project for a while, but have held off on actually buying the token for the reasons that you just espoused. I'm also with Legendary on the Hoffman take. I thought that was a terrible take. I mean, the man's allowed his opinion, but I think he is just flat out wrong if you don't think that this world is going to exist where you have privately run, highly centralized blockchains in addition to net public good, highly decentralized blockchains like Ethereum. And you could even say that, 70% of the nodes run on hyperscalers, so it's not all that decentralized anyhow. I think decentralization matters. This is probably one of my biggest fears about just the space and sort of, I don't want to call it the co-opting of crypto by big institutions, but the fundamental ethos and philosophy of decentralization matters. I mean, just look at, when I tell people stories about like why does decentralization matter, you just look at the CrowdStrike bug from last year, right? Where one bug affects like all the Windows system shuts down, Delta can't fly planes anymore, right? Like it just goes to show that with decentralized systems, that robustness that you get, is really critical. And I think this is why Ethereum is always going to be a net good and seen as sort of the de facto smart contract platform for many, many years to come. But I think that what they're doing with Converge and all this other stuff, like this private chain, is great. I will tell you right now, I've talked to chains as the head of protocol partnerships that are building basically secret blockchains that are private, that are going to allow banks to transfer assets because they don't want things on a public ledger. So I think it's just a really misguided take to think that to be a decentralization maxi, is decentralization important? Yes, absolutely. But I don't think it's the be all end all. And I think that we will always live in a world where we have these big decentralized public chains where there is going to be a lot of transparency, but there's also going to be a number of semi-private, somewhat centralized chains where a foundation gets to pick like, look at Hyperliquid, right? Like there's like 4 validators all run by the team that are running that thing. So, I mean, you're just going to have to live with a world of trade-offs. But yeah, I thought Hoffman's take was a bit too tough.
I like that take. My only thought as part of that centralization, decentralization question is I hope that it stays sufficiently profitable to secure the decentralized option, because it will clearly become very profitable for people to run the private options. And so long as the correct incentives exist, yeah, we can have both, right? But if people who are securing the public option, the decentralized option, start to look at all the private options and say, well, why am I staking all of this capital for an asset that keeps going down at the moment for whatever the ETH staking rewards are at the moment? I don't think they're very high. It's 3 to 4% maximum, I think, which maybe not, it's not bad, but it's maybe the other things can be more profitable. So long as it's got the correct incentives, I guess I'm just hoping out loud that it continues to have the correct incentives, because I definitely agree. We don't want a world where there are no decentralized options. So yes, there will be private options. Maybe that's more appropriate for certain institutions, but we want the decentralized option to still be there and for the incentives to be sufficient enough for people to want to want to secure it. So that's my kind of concluding hope on that part of that story. Let's keep it moving though, because we've got a couple of other bits of news. We've only got 8 minutes left today. Legendary, I know you want to get into Robinhood. So launching prediction markets. This is pretty big. We know the value of prediction markets. Robinhood getting into that game. What do we need to know here?
Absolutely. Very, very relevant news. We do have Kalshi, the prediction market, partnering up with Robinhood. And why is this relevant? Because if we take a quick look at Polymarket, the leading prediction market, to get a sense of why this has been one of the most successful narratives this cycle, we see that Polymarket did an all-time volume of more than $11 billion. You have the most successful months being obviously October and November, leading into the presidential election, where this was the key platform to take bets on, where both months they did more than 2.4 billion US dollars in volume. And then there was the big fear that after the election, this platform is going to be irrelevant, which turned out to not be the case. Looking at March, and March is just basically more than halfway over. Polymarket already did $465 million of volume in March. Looking at Feb, 800 millions of volume in February alone. And now going back to the news, going back to the partnership between Kalshi and Robinhood, obviously we'll have 25 million users who will be able to use that in the future and kind of have a very, very serious attempt to take over the leading spot when it comes to market share for prediction markets. So this is a massive partnership. This is also relevant because Kalshi is the prediction market that is legal and is working in the States. Just to paint a bit more color to the news, we have the co-founder and CEO of Robinhood, Vlad Tenev, commenting on that and making a very important point, in my opinion, which is enter prediction markets. At the most fundamental level, they are the application of capitalism to the pursuit of truth. Market incentives and the wisdom of crowds sift through all the information out there to determine answers to well-specified questions and outcomes to important events, sometimes even before they happen. And this is exactly the stance that you want to read from the founder of Robinhood, from the entity that's partnering up with the prediction market, that they understand, yes, it is ultimately a very capitalistic tool. It is profitable. It is worthwhile to use because it's just the right incentive. It's the money-seeking incentive to find the truth. And if you understand this about a prediction market, you obviously understand how prediction markets work and why they can be so successful. And it's just, I think, one of the most relevant partnership announcements that we've come across in the show over the last couple of weeks or months even.
I like it. Yeah, excellent summary there. A lot of good information. I'm super interested to see how Robinhood take that. When people talk about how do you get exposure to crypto, maybe without being in crypto, people talk about Coinbase immediately all the time. I know a lot of people who are super bullish on Robinhood as a product. And so I think we're going to need to now keep an eye on how their numbers are going on the prediction market side. Super interesting stuff. Rahim, do you have any thoughts here in particular, or do you want to take it through to the next headline, which is about World Liberty Fi?
Happy to take it to the next headline. So we essentially, like, World Liberty Finance announced their second closing round yesterday with a total of 550 million US dollars. So just to give you a TLDR for anyone who's not familiar with World Liberty Finance, they are essentially a decentralized, they're a DeFi platform that came into existence back in October, endorsed by our beloved in the crypto space, Donald Trump and his entire family. So Barron Trump, Eric Trump, and Donald Trump Jr. The whole concept of World Liberty Finance is basically borrowing and lending against crypto. The idea is to bridge traditional financial markets with crypto markets. They announced their first sale back in October, which was 20% token supply and raised about 300 million. Unfortunately, the sale was rather lackluster. You had to KYC through it. It was very frowned down upon. They ended up raising only about $11 million compared to the 300 million they had initially spoken about. Eventually, we had our Lord, our Savior, Justin Sun, step in, put in $30 million at the end of November, I believe. and own like 5% stake in the whole ecosystem. Going further, in January, he ended up putting another $45 million with having an ownership of $75 million worth of tokens. And at that point, they had closed the round at $250 million. And then they closed the second one yesterday, I believe, at 300 million US dollars with a total amount of 550 million. They hold a bunch of assets. At one point, like they've been trading in and out because they've been partnering with like a lot of blockchains and ecosystems. They've been swapping a lot of ETH with Sui recently because they announced their partnership with Sui. But at one point, they were holding 47,000 ETH, a bunch of Bitcoin, Aave, Ethena, Chainlink, and a bunch of other ecosystems. So yeah, seemingly they raised another round at 550 million total US dollar value. It has also at some point, I was reading online, ended up resulting in a liquidity event for the team to have like a lot of the tokens come into their flow where they can actually get access to them way earlier than initially primed to. So I think that was like fascinating. But yeah, clearly they've been raising money. People are bullish. Institutions are bullish. People are bullish in the US to put money in Donald Trump's ecosystem.
Yeah, so that excellent summary, taking us through like the different amounts that they raised. Just one slight, or just to clarify, I don't think it's the valuation at 550 million. It's so they've totaled 550 million in gross proceeds from the various token offerings. So still a very sizable amount. I think the one thing people have asked questions about this, Rahim, I don't know what your thoughts are on this. I don't know if this has been officially confirmed by anyone, but there was obviously that Blockworks article which suggested that a number of these token arrangements were being done on a swap basis. I think that's what you were alluding to when you said that. Like, if you buy 5 million of this thing, we will buy 5 million of your token. And I think people, I don't think people were ever really a fan of that. But when the Sui deal was announced, I think that might have been last week or the week before. When we say announced, by the way, none of that swap arrangement was announced. But when people saw that happen, I think a lot of people immediately assumed that this is what's taking place, maybe behind the scenes. A lot of people kind of spoke out against it. And again, in the same way that maybe people are talking about like the spirit of crypto getting lost and people getting a bit disenfranchised, I think this is another example. If that is how things are being played out, it's another example where people are kind of scratching their head saying, what are we doing here, guys? Like, what is the way that we're going about business in what is supposed to be, I don't know, maybe slightly more permissionless, decentralized?
It's become a PR move in like some ways, like you think about it, right? Like the way Sui and like their team had posted about it, it was essentially like a massive PR move. And that's what all these like partnerships seemingly becoming. Like they swap their ETH, they swap their like stables into like this new ecosystem. So now you go and like you tell your bootstrap products, or you tell your investors that, oh, we are in like Donald Trump's like ecosystem now. We are like a way more bullish blockchain than all the other 25 other L2s that exist. So I do think like it's become like a very institutional PR battle in some way and stuff. I actually feel like we've kind of dabbled that on the ETF side as well. Like everyone's having an ETF with whether it's XRP, whether it's Say, whether it's like Sui. So I feel like we've gone into like this like PR move. And at the end of the day, whether it's Ethereum, whether it's like Sui, whatever, I think product and whoever builds a better product, a better ecosystem in the long run will eventually be the winner, as cliche as it sounds, if everyone's kind of playing the same game.
Yeah, do you know what? It's kind of like it's kind of we've got to close out pretty soon, but maybe a final take when I hear Legendary's take on this as well. Like, in some ways, it's just business, isn't it? And you know how the movement ecosystem got a lot of criticism for arguing that, people should go and lobby the politicians because you want to win the business. Go to the countries, go to the new nations that are thinking about integrating blockchain and go and win their business. And I thought that some of that at least was unfair, because who else is going to do it? If you don't go and do it, someone else is going to talk to them and then they're going to get the business. So I think there's something here about maybe disclosure. Like, if you're going to do it, then maybe it should be more open, but then not everything is open all the time. I don't know. I think maybe if it was just slightly more transparent, that's why it was happening. Because in essence, a token swap is not a bad idea for anyone. Even if you had a DAO and a modern market had a DAO, and we were like, oh, do you know what? Maybe it'd be a cool thing to do. We want like good holders. We want institutional holders. We want you to hold some of ours, and we hold some of you. Like, it's not a bad thing to propose as part of some type of strategic partnership, right?
Institutional 3-3. That's what it is.
Exactly. Institutional 3-3. Exactly. That's exactly what it is. Legendary, what's your final take here? Close us out before we close the show.
Look, quick story to elaborate my final take on that. In Austria, we purchased 20 years ago what we call the Eurofighters, our Eurojets, fighting jets. And as part of that, there's been a kickback deal, I think, for the company that, I don't know, facilitated the investment or whatever it was, to then invest for billions into Austrian companies. And there's been the kickback of the kickback of the kickback. And our courts are like still working through that fucking case 20 years later. And there's like still new details that are surfacing as a result of that. So if anything, those kickback deals have been happening ever since. And to a certain extent, yes, it's part of doing business. Different point, it's also pretty weird and shady if it's so opaque. So if anything, the positive framing for that for me would be, at least it's happening on chain. Doesn't take 20 years to find out what the incentive was and how the business went down. You can track that. And I feel like everybody who has an interest or a stake in that can find that out pretty quickly, because it happens on chain. Like it or hate it, at least it's transparent.
Yeah, fair enough. Let's transparency is what we like in the end. Good stuff, boys. Great conversation. I like that. We went kind of deep today on a variety of things. Great chat. Hope you guys enjoyed it as usual. Remember, we do this every single day, Monday to Friday at 7 a.m. Eastern time for 1 hour. We're live on X Video, YouTube, Apple, and Spotify too. Thank you to Legendary and Ryan for co-hosting. Thanks for Funky for his contributions. As always, we will be back again tomorrow, same time, same place. Thanks so much for joining us. Have a wonderful day. Take care. We will see you tomorrow. Bye-bye.